So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Build As Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth in life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth in life so you can give more all the way to help MVPs. My name is Brett Swarts. Each and every episode, we're joined by some of the world's top entrepreneurs, millionaires, or billionaires, and they share their insights, secrets, and wisdom with us so we can all compound our impact and make a bigger difference in this world. I'm excited about our next guest. He's out of North Carolina, and he's the CEO of Summit Financial LLC. With over 3 decades in the finance industry, he brings a rich tapestry of experience from leading major financial institutions. He has a diverse experience involved strategic acquisitions, notable when he was the co-CEO of Cantor Fitzgerald Wealth Partners, where he rapidly grew their assets to more than over $5 billion. He has extensive leadership at Wells Fargo and Wachovia, managing multi-billion-dollar revenues and investments, and so much more. Please welcome to the show with me, Mr. Stan Gregor. Stan, how are we doing?
You're doing good, Brett. How are you?
Doing well, thank you. For our listeners getting to know you for the first time, would you give us just a little bit more about your story and your current focus?
Sure. Well, Summit is it's a 43-year-old firm. It's probably one of the older and larger partnerships that are out there in the wealth management space. And we cater to advisors, basically giving them the chassis for servicing their clients in a multi-family office model set. So having access to the products, the services, the expertise of our in-house personnel, our attorneys, our tax specialists, our planners, our investment teams, our technology company, our marketing company, kind of the full gamut.
Excellent. And a little bit about Stan growing up. I'm curious, where'd you grow up at? What were the 1 or 2 strengths that you believe or superpowers you were given, and how does it help how you help and bless people today?
Superpowers, I don't know about that. I grew up in New York City. Uh, Grew up in a middle class family. Went to school, got started early in my career at a large institution, Citigroup. Spent about a decade there. Moved on to various roles in management, whatnot. Was part of seen a lot of different firms, bulge bracket firms operate really well, and some things I would have done differently. And now that we're part of a large multinational firm that's been around, as I said, for 4 decades, it's given us the opportunity to really create a model, a structure, a ecosystem for advisors so they can truly deliver high-end services, do the right thing for their clients, and really help expand their enterprise value. So that's been our model.
Excellent. Let's dive right into that. What would you say is the number one, habit or secret that you've been able to help advisors that maybe have 100 million AUM and they're looking to scale that to a larger level or provide those family office services? What's kind of the first step to moving beyond maybe the ceiling that they're stuck
Right.
at?
Yeah. Great question. And we see that on a daily basis. I would say 99.99% of the advisors out there are really leveraging what they have at their fingertips, doing a great job, but the clients want more. And in many scenarios, those advisors do not have access to maybe the product, the services, the connections, some of the more boutique-ish kind of opportunities versus what's traditionally available, which is kind of off the shelf and everybody has access to the same stuff. So that, to me, if you can as an advisor, if you can transition your business from, I would say, it providing clients with access to traditional products and services to a family office style approach, which means everything from investments, credit, financial planning, business succession, the full gamut. That is where your business starts to grow. And frankly, the more wealthier and sophisticated the client is, I would say the more Summit can help the advisor win a lot more of that business. So we started, back in 1981 as a multifamily office service model. Obviously, it was on a small scale. Today, at the end of this quarter, we're probably going to break the $30 billion barrier of assets that we oversee. But the model has always been empower the advisor with a broader set of services. And the other approach that we have done is the services and the personnel are in-house, right? We don't go out and rent an attorney for financial planning or uh, tax work or whatnot. We have in-house experts that truly work with the advisors. They position themselves as an extension of that advisor's team, and that's what clients want to see. They want to see that you have the expertise in house, and you put all that together. It makes the advisor feel so much more knowledgeable and experienced, and really on the client side. We focus on the client.
Got it. Look, speaking with Stan Gregor, everybody, you can learn more by going to summitfinancial.com, summitfinancial.com. He's built a company by advisors for advisors. He said over 30 billion now collectively with his team. So if I caught that correctly, so number one is understand that the clients do want more, and that the higher level of sophistication and net worth and purpose that they have for what they want their wealth to do, they're going to ask and seek for more. And so by providing the product, services, the connections, and the access to the family office style approach, and just investment opportunities, I imagine, as well. Was number one thing I caught. Number two, it sounds like the team, right? Building the dream team in-house. So these are not outside consultants. These are direct on your team, that dream team that are truly working with the advisors, has been the game changer so far for you guys. Oh, some of the game changers for you guys so far. Is that a fair summary, Stan?
That is a very fair summary. And we've made significant investments in technology too. So you bring the people, you bring access to the products, and you bring the technology all together. It creates a complete system for servicing the client and helping the advisor navigate through that.
Got it. Let's dive into technology. So when you say technology, what do you mean by that? And like, what are the kind of the one or two game changer technologies that when advisors join you, they say, oh gosh, yeah, this is what's been missing a long time.
Yeah, well, I'd love to tell you it's one technology. Our tech stack today probably has 36 or 37 different technologies feeding into it. So everything from a basic CRM, right, from a CRM standpoint, to performance reviewing technology, trading software, financial planning software, risk mitigation software. I mean, there's so much in it. 32 different or 37 different technologies, I believe, that are plugging in. And it's connected with all the custodians, your major custodians like Schwab, Fidelity, Persian, right? Um, Fidelity, I think I mentioned Fidelity as well. But yeah, there are multi-custodial connectivity points. There's financial planning components, there's trading components, there's assessment, risk assessment, stress assessment. There's a lot in there. And the way I would explain it to you, Brett, is it's very similar to your iPhone, where you download an app. Uh, I'm not a technology programming expert. I can't tell you how the heck it works, but somehow when I download that app, my contacts or whatever, it works with that app automatically. That is how our technology is structured, to synchronize with the data that's in a data warehouse, which is in your CRM.
Excellent. That makes sense. Okay, so we talked technology, the people, the process, right? The network, the systems you guys have in place. What's maybe the one that's mostly overlooked for the advisor that they didn't expect, but then they come in and they go, wow, that is also a game changer. Anything else that you would add to what we've already been said?
Yes, our investment team has had so much experience on the private side, on the alternative side, right? Private investments and alternatives. And that's what I would consider to be a game changer, a differentiator, where in so many scenarios, our team is scanning on a weekly basis for new opportunities. for what, as I mentioned earlier, more boutique-ish opportunities, not something that is off the shelf that everybody has access to, but some of you more smaller, private, and I would say probably higher returning returns, right, for the clients because they're smaller. They are smaller structures that have more upside. So having access to the private market and the alternative market and having the risk parameters built in. So our team goes in and does all the operational due diligence, the investment due diligence, having that work done from professionals versus advisors relying on a third party service, I think it has been a game changer. And we've seen that from clients. We've heard that from clients. We've heard that from advisors. Um, that is a complete game changer from a offering standpoint for an advisor to that client.
Yeah, I couldn't agree with you more, Stan. I mean, the purpose-driven entrepreneurs and investors we serve as well, that's where they made the majority of their wealth, in that
Right.
business, in that real estate. And I think, 50% of all the total net worth in America is tied to high-end commercial real estate, high-end primary homes, and private equity, which is businesses, all of which are illiquid and that are transferring now, which we'll talk about business succession and capital gains tax exit planning right now too, and with you. But if they don't have the opportunity to passively invest into groups that have been vetted, that have the proven track record, that are private, and sometimes even, they can get closer to their business model just as an understanding. I call it the sleep well at night test, right? And there's a certain amount of the portfolio that needs to be a part of that. Otherwise, it can be really challenging to exit someone on a $100 million or $1 billion business or real estate just to go into something that they're not familiar with. So with that, what is the process of which you mentioned operational due diligence on those private equity groups, right? So what and risk assessments? Is there a formula that you guys have built to make sure that these are the best of the best? Like, what is your, and is that a, you level up each year? And I'm just kind of curious on that private side of it. How do you
Yeah.
separate the best from just the average?
Again, great question. I think the most misunderstood piece of our business is this private research piece, right? So when you're looking at traditional 40 Act products, there are so many different research reports out there that give you feedback on, a star rating or a quality rating or whatnot. When you get into the private space, you don't have as much information that is out there on a traditional 40 Act product. A lot of it is obviously private. A lot of it is confusing. And it does take a much deeper dive. And unfortunately, if you're sitting as a fiduciary, unlike a brokerage product, the day you make a recommendation is what the regulators say is your litmus test. Based upon that day, did it qualify? Great. But you're really not required to follow through for the rest of the life of that product or that investment. On the fiduciary side, you are. So you're accountable day one, but you're accountable go forward as well. And that's a big disconnect I see in our industry where advisors many times go into these private alternative structures and nobody's manning the ship after the investment date. So from capital calls, waterfall structures, different debt structures the firm may take on, or they start diluting the shareholders with different profit interests and whatnot. And that's what our team really focuses on is obviously day one, we did the investment due diligence, which is this a good investment? But the operational due diligence, Brett, is we follow the dollar, right? The regulators want to see if you as an investor invest a dollar, follow that dollar through that python. Where does it come out? What's that return? And then does that return match what the firm is stating they will generate and do for you? So there's an ongoing piece, and that's critical. I think that ongoing piece is just as important as a front end piece, and that is a piece and a process that we put in place. And knock on wood, the investments and the alternatives that we've been involved in have performed well, and hopefully they continue to perform well. But that takes a lot of time, and more importantly, it takes a lot of quality expertise. You can't just wing that. You can't put a junior person on that task. You need people that are truly experts in that space, and that's what we've built as a firm. We have an unbelievable alternative investment group.
I love the way you put that together. That makes total sense. Investment due diligence, but then you got to follow it a dollar. What I hear by that, I hear accountability of what the group that produced and has, even if they have produced that track record for 10 plus years and have been performing, it doesn't necessarily mean that past performance is going to predict or be a guarantee of future results. So you got to follow the dollar, hold them accountable to that. And does it match what it was, right? What's the variance between that? And that's just as important. I think about the variance report, right? It's just so basic in a P&L, month-to-month variance report or year-over-year. Well, why not always be doing that with the private investments and having them report to us, right, the investor, to make sure that they are held accountable. So the quality expertise, you're right. I think that's probably the hardest part. Do you feel like you built something valuable, but you're unsure how to exit without losing a massive portion of it to capital gains taxes? Whether you're selling real estate, a business, Bitcoin, or other highly appreciated assets, you don't need more tax noise or boxed-in strategies. You need proven, flexible, and practical exit planning. That's why we've created Capital Gains Tax Solutions. At Capital Gains Tax Solutions, we help purpose-driven entrepreneurs and investors design customized capital gains tax exit plans using a trust with an installment sale method. So you can defer capital gains tax, unlock liquidity, diversify your wealth, and move forward with more freedom and impact. Instead of being trapped by a 1031 exchange deadline, over concentration of risk, or writing a check to the IRS, you gain flexibility, timing control, and asset protection, and the freedom to align your capital with your goals, values, and legacy. And here's the best part. It's not about a product, it's about a plan and a team to help you execute the plan. A clear strategic exit plan built around your timeline, your priorities, and your future. Ready to protect more of what you built and create a smarter exit? Visit capitalgainstaxsolutions.com to learn how a capital gains tax exit plan can help you keep more, invest with intention, and make a bigger impact. Go to capitalgainstaxsolutions.com or click the link in the show notes. How is AI helping you with the due diligence and the quality expertise to enhance that? Are you guys using that much at this point?
We are, and it's as you can imagine, it's still in development, right? So in a lot of more simple tasks, it makes things faster. You can get access to information quicker from a search standpoint. But with that said, it still requires human intervention to inspect and check that result. There's still It still is a pretty high level of mistakes that are coming from that research, because garbage in, garbage out, right? If it's scanning the web and it's scanning outside information, sometimes it's not accurate. But AI is a tool that I think is going to get better over time. It's going to get the quality will go higher, uh, but we're using it from I would say, secondary source of information, but more importantly, we're inspecting it. Does it make sense? Is it tracking? And then unfortunately, we still have to do additional follow-up on that because you can't blame AI in a bad investment, right? You can't go back to regular to say, well, Chat GPT told us we should buy it. That's not going to work.
Yeah, well said. We're speaking with Stan Gregor, everybody. You can learn more by going to summitfinancial.com, summitfinancial.com. 40 years of independence. They're a preeminent investment advisory firm, proud to continue and to build for clients who are high net worth and who are looking for their services, and also for advisors to jump in and they can you can hire them. So let's keep going here. We kind of teased about succession planning or business exits or large real estate exits. What's the number one frustration when it comes for the business owner or a real estate owner that's selling a 10, 20, $100 million plus business or real estate with capital gains tax? And what are some of the approaches you take to help them build a plan that they have an ability to defer the tax or mitigate some of the tax?
Great. Again, you keep asking great questions. So to me, there's a difference between an investment advisor and a financial planner, right? And the client, most of those successful people that you mentioned, we have great advisors managing their liquid investment portfolios. But when it comes down to their core business, their legacy, probably their largest asset, in most cases, those are complicated structures. There are timelines, there are business structures. Is it C corp, S corp, LLC? Are there embedded gains? What does the business succession plan look like? Buy sell agreements. There's so much. So uh, we have invested in having super high end financial planning experts, attorneys in house for that reason. So in those examples, they partner with the advisor who has that relationship. They work with the advisor and the client to gather the information to get a true snapshot of what does the financial picture look like, what does the risk picture look like, and what is the aspirational goal or goals of those owners, right? Is this a business they want to sell before they pass on? Is this a business they want to give to their kids? Are there other partners, embedded gains? You mentioned you moved to the state of Florida for certain tax reasons. These are all creative structures that have to be thought out very clearly. And I will give you my own personal feedback. What I've seen in this structure is when the advisor is working with our financial planning experts and our attorneys, the advisor goes in a sports analogy from being a player or a coach, which this is a great weekend where we've seen a lot of action of people being fired, right, in player and coaching positions this playoff season. But it positions the advisor in that general manager role, right, where that advisor is truly aligned and connected with that client. And we've seen the attrition rates disappear. We've seen the stickiness of the business go on for a much longer time. We've seen the client and the advisor build this complete trusted bond that it was different than when the advisor was just managing the investment portfolio. So, one, we're helping the client, but two, I think we're also helping the advisor and the client build a much stickier relationship that is viewed as a permanent relationship.
Yeah, I couldn't agree more. I mean, the sometimes I call it the offensive coordinator, making sure that you're getting all the team in the right place and calling the play, because you're right. On the exit, you need to have things in place prior to, or you eliminate 90% of the planning that you can do for eliminating estate tax or capital gains tax. And then you also want the strategy to fit what they're trying to solve for, whether it be succession planning for the children, whether it be them, they're still wanting to be an entrepreneur to be able to do more deals with the strategy moving forward. We specialize in a strategy that it's a trust, some of it's irrevocable, some of it's an installment sale. But the biggest thing we see for the clients we serve is some of them have a season of life where they need to be able to pause, to spend more time with their family. And then once the kids are old enough, they want to go back into being an entrepreneur and their calling. Some of them want to be fully retired and unlock what's called truly passive income. We believe that truly passive income is to your freedom and impact, is compounding interest is to your money. And it's 50, 60, 70,000 a month, whatever it is, but you don't have to think about it. And it's recurring and it's predictable. It's diversified, there's liquidity. And the exit is that moment in time where that momentum can either continue on, or places like New Jersey, New York, California, Minnesota, Oregon, some of the highest tax states, Illinois, the government's going to crush 20 to 50% of that. And then the second piece is people miss, I think, is the estate tax. They think that the stepped up basis is going to solve their tax issues for their families, right? But they forget even 30 million married and 15 million single is still just a certain amount, right? And the net worth of the family is going to get hit with that 40% death tax. And so weaving all of these things in prior to an exit, when someone has spent their last 10,000 hours building it, it can be a big challenge, but it's also a big opportunity. So I love your approach of the team and the proactiveness to be able to be a general manager. I call it an offensive coordinator, right? Because if you don't call it in the right way, in the right order, then that moment you can get taxed. Okay, excellent. What haven't I asked you so far, Stan, that I think would be helpful for the listeners who are out there, or even really the advisors? I mean, the show's been mostly towards the advisor, which is great. It could also be towards the client, or anything you want to say before we go to the lightning round.
Yeah, I would say our model is different. So I started earlier saying we're one of the older and larger partnerships out there. That's the ethos of how we built this company. We are aligned with the advisor. We try always to be listening to what else should we be doing differently. So you're mentioning the business owner succession planning in our ethos, in our ecosystem. Yes, you have the advisor, you have the financial planning team, but there's a whole set of other players on our squad that help. So it could be the investment banker. So great, we did all the prep work to make sure your family retains the majority of the net worth of that business. But now you're looking for selling the business, and are you going to sell it to a bad actor, a good actor? We have those partners that we trust and work with that do that same due diligence that we do on the investment side and the operational side with the potential player side of who may be buying the business. So if you want to think of it as a complete circle, right? Most of the competitors that I see out there draw the letter C, where they have most of the components. We do the complete circle. So the investment piece, the planning piece, the tax piece, the business succession piece, the buy sell agreements, and then probably as important as all of those things together is if you're selling the business and you're not getting paid 100% upfront, you're taking risk. Well, do you want to be taking risk with a good sale partner, or do you want to be taking risk with an unknown, and then you're getting in litigation, you're getting into a challenge, and you're fighting. So we try to think of the whole thing, Brett, from beginning to end. Can we service that client in from an A to Z, or as I call it, a complete O factor? And if you do that, I think that's what it separates, from like Summit, from so many other firms out there that have multiple pieces of the pie, but not the entire pie.
Could agree with you more. That's also why we steer away from a traditional installment sales that you're lending to the buyer, at least for a large percentage of it, unless you can substantially increase the value of the asset, of the
Hmm.
sales price. And you're exactly right, because the last thing, especially a business owner wants to do, a real estate owner, is take back the asset they just sold in a 2 or 3 years, or have to go to litigation with that, and then the value is less. And
Right.
so to be able to diversify away from what is probably 70 to 90% of your net worth already on that large exit, and to diversify and get it out. But if you're gonna finance that buyer, you got to be careful, right? Because now that risk, and you're basically
Yep.
at their ability to perform, and their ability to cooperate, and like you said, bad actor, good actor, or even just, we've seen recently with interest rates the way they've gone, they may have borrowed at a decent interest rate a few years ago, but that has adjusted, and now they're knocking on your door to borrow from Stan to be able to pay back Wells Fargo or B of A or whoever they borrow from, because that rate went up. And you're in a position going, well, do I really want to take back the business? And now you're deferring your payments, and it's just, yeah. So traditional installment sales for that reason are not great usually. So, okay, great. That being said, yeah, like the full circle, that makes sense, instead of just partial circle. That's so important. We're way over time, so are you ready for the lightning round?
Yeah.
All right, knowing what you know now, Stan, if you go back to your 20-year-old self, what's the one golden nugget make sure to tell yourself to do?
I wish I had the courage earlier in my career to say no, right? And I think we all have experienced that, where we just didn't have the confidence or the experience to say, I don't exactly agree with that, and this is the right way to do it. So I wish I had that courage at a younger age. The same courage I have today, I wish I had, 20, 30 years ago.
I love that. Courage to say no. Fantastic. Second question, maybe the best book you've read or recommended in the past year.
I still go back to good to great. It's all about having the right people on the bus and getting rid of the wrong people. Take a business, take anything, friendship, business, sports team. If you're surrounded by great people, you're all aligned. Most likely, you're going to have great results.
Love it. Question number 3, what are you most curious about right now?
I am curious about this whole COVID experiment. I call it the COVID experiment. This class of 2021, 22, coming into this workforce, having a different social experience than you and I have had, coming into business. And I'm curious, does it make us a better world because of that, or the challenges? I have my guessing going on. Some things I see as a nice equalizing positive, that there's more, call it free time, more self time. But I also see a big disconnect by not being mentored by some of the stuff that you and I have had in the office face to face. And I'm curious how that experiment looks 10, 15, 20 years from now.
Yeah, you got me more curious about that now too. Next question, number 1 leadership quote or theme that you strive to live by.
Winning is hard.
I wrote that
That's the
one down.
obvious. Okay. Winning is
Yeah,
hard.
yeah. Anything worthwhile is uphill all the way, right? That's another way. I think John Maxwell says that well. If it's not worthwhile, it's probably not going to be very hard. Excellent. Next
That
question. How
that
do
and the
you?
excuses die, right? Excuses die, the record stands. So it's winning is hard. Just find a way to win.
Excellent. How do you best stay ultra healthy and super disciplined?
Balance, right? So you need time for your mental health, you need time for your physical health, your emotional health. emotional health rather, and you also need to be a leader in what you're working on. So it's multiple facets. If you tilt one way too much, it affects the other components. Balance.
Excellent. Balance. That's great. And then really the last question, we'll wrap it up, Stan. And it's really the heart of the podcast and our YouTube channels, which is practicing a mindset of stewardship over ownership, right? And this idea of stewardship can be defined a couple different ways. The way we define it is, everything we've been given is a gift from God for us on loan, basically to steward and make a big impact, bless families, help them get more freedom, and help them to steward even their resources as well. So how do you best stay centered with a mindset of stewardship over ownership?
Well, it's something my dad told me way on in my career early on. Whatever decisions you make, imagine it shows up on the front page of a paper tomorrow, right? And I'm going back, a couple of years because we used to get physical papers. Uh, I don't think of ownership until that's the byproduct of good stewardship. If you do the right thing for the business and the people and the clients, most likely the right thing happens for the business, right? If it's almost like a three-legged stool. If one of those legs is off balance, the stool just it doesn't work right. It's off. So do the right thing for all those components, all those three constituents. The ownership piece will work out, and the results will work out.
Stan, Gregor, I want to thank you for being on the show and the podcast and the YouTube channel and sharing your wisdom and insight with us. We covered quite a bit here in the last 29 minutes. I want to encourage you to keep using your gifts and your expertise to help families be great stewards and advisors to be great stewards to serve their clients in a meaningful way for more impact, for more freedom, for more profit. For our listeners, one last time, if they want to get in touch with you or an advisor who's listening, what is the best place for them to find you?
Summitfinancial.com. That's our website. All of our information's on there, and I look forward to speaking to them.
Awesome. Thanks, Stan. And I also want to thank all of our listeners and viewers for listening or viewing another episode of the Built to Billions podcast. We're also streaming on Capital Gains Tax Solutions podcast and YouTube channels. Hey, we're on this journey with you to scale from millions to billions so we can give more all the way to help MVPs, the most vulnerable people. My name is Brett Swarts. I want to encourage you to take action today. Of course, if you're an advisor, check out what they're doing. And if you're a top advisor and I think they can serve you in a really meaningful way, check out what they're doing. And as well, if you have a large exit of Bitcoin business, public or private stock, real estate, and you're looking for solutions beyond the 1031 exchange, we want to encourage you to go to capitalgainstaxsolutions.com to look at our services for building a capital gains tax exit plan. Appreciate everyone listening out there, and we'll talk to you again real soon. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.